Welcome to Accounting Actuals. We simplify accounting and bring practical insights on the financial tools that every business needs. Let's face it, some accounting terms sound like they belong in a courtroom drama, but most of them can be harmless once you know what they mean. Today, we're going to decode intimidating accounting terms and translate them into practical language. No stress and no spreadsheets required. Today, we'll translate 3 of them into plain English for you. Let's start with impairment loss. It sounds like a plot twist. It's what you record when something you own has dropped in value permanently. Not just market fluctuation. We're talking about a lasting decline. What triggers impairment? Natural disasters. Legal changes, like zoning or licensing. Technological obsolescence. Poor market conditions. Physical damage. Unexpected underperformance. Example: building value drop. Let's say you bought a commercial building for $1 million. But then, zoning laws change. You can no longer use it for your operations, or even sell it for close to what you paid. This drop in value is an impairment, and you need to write it down, reducing the asset's book value to what it's realistically worth. Why it matters. Yes, impairment losses can sound intimidating, but they don't directly impact your cash. While they do impact is your net income and your balance sheet. They show you the reality you're facing reality, not a fiction story. It's a sign of transparency and financial maturity. Next up, Contra Accounts. Creepy name, simple concept. And to be fair, it does sound defensive or even aggressive. But in reality, they are super useful and help your financials stay honest and accurate. These are accounts that reduce the balance of another account. They don't stand alone, they exist to offset. Here is a list of contra accounts. Asset side. Accumulated depreciation, allowance for doubtful accounts. Equity side. Treasury stock. Revenue side. Sales returns and allowances. Example 1. Accumulated depreciation. This one lives on the asset side. Let's say you bought a truck for $50,000. That full amount sits in your fixed assets account, but every year it loses value. The contra account, called accumulated depreciation, shows how much it's declined. If that truck lost $10,000 in value, you'll still see $50,000 in assets, but also $10,000 in accumulated depreciation. Your net book value is now $40,000. Example 2. Sales returns and allowances. This one lives on the revenue side. Let's say you made $50,000 in sales, but $2,000 worth of products were returned or discounted due to issues. That $2,000 goes into a contra revenue account called sales returns and allowances. It reduces your total sales, so your income statement shows true net revenue. Why it matters. Contra accounts aren't bad. They're just honest. They tell the full story of your finances, the good, the used, the returned, and the real. Now this one sounds like a secret agent, subsidiary. It's one of those terms top-level finance and accounting pros love to throw around. And yes, sometimes it's used to intimidate or sound impressive in board meetings. But don't let it scare you. Meaning, number 1, legal entity. A subsidiary is a smaller company that's owned or controlled by a larger company. For example, if your main business sets up a separate LLC to manage real estate or operations, that new company is your subsidiary. It has its own books, its own tax ID, and you consolidate its results with yours. Bonus concept: intercompany. Subsidiaries often involve intercompany transactions. One entity pays or owes the other. These show up on the balance sheet as amounts due to or due from between companies. They must be tracked carefully and eliminated during financial consolidation, so you don't overstate revenue or expenses. Meaning number 2, subaccount in chart of accounts. Sometimes, subsidiary also refers to a subaccount under a main category in your chart of accounts, like having office supplies, HQ, and office supplies field under one parent account. It helps track details without cluttering your financial statements. Why it matters. Whether it's a separate company or just a more detailed account, the word subsidiary means your business is getting more organized, and that's always a win. Thank you so much for watching. For more information on how we can support your financial goals, be sure to check the details in the description below or visit our page.